Hello and welcome to my video about trading fast and thin markets with Jigsaw trading tool using the order flow concept. First of all, this is required disclaimer by US government in case you are US residents or US citizens. You should take note of this disclaimer. I'm not an investment advisor. I do not provide you with information how to make trades. It's just an educational information. You have to make your own decision and consult your financial and tax and whatever advisors. And you should know that past performance is not an indication of future performance. However, I'm not going to give you any past or future performance indications here whatsoever, but this is what is required. Now we are over it, so let's get started. I want to talk a little bit about thin market first, because as a user of Jigsaw trading tools and a member of the group, you are most likely exposed to traditional thick markets like treasuries, like indices, like S&P 500. So, what is the difference? Well, first of all, if you're used to see fat figures on the ladder, then you're not gonna see that in thin market. So the first characteristic is a low level of liquidity comparing to SIG markets like S&P 500 or bonds or many other markets. But those two categories are most notorious. So you should be ready to see much lower numbers. In case of gold, you may see in nearest level to the inside bid and offer, you may see just 3-5 contracts, sometimes even one, and some further away you should see something like 10, 15, maybe 20, and sometimes maybe 50, but that's not what you would see during the calmer times, only during the faster moves. Faster moves is a second characteristic distinguishing thin markets from thick markets, and you should see like a burst of order flow 10 to 20 ticks at a time instead of 2-3 ticks during active market phase, up to 50 to 100 ticks during news release or major liquidations. Especially it applies to market like gold or nat gas with most thin ladder, and less so to markets like crude, but still crude is very active market, so you should see faster and larger moves. Um, and the third characteristic is a larger size of rotation. It's 30 to 50 ticks on crude or on gold, as opposed to 8 to 12 ticks on ES. So it's rotations or legs, whatever you want to call them. It's this zigzag patterns you normally notice on your chart as a characteristic of the market. So how it differs? On a more practical aspect, how trading thin market differs from trading thick market, and how reading thin market differs from reading thick market. Well, thin market is definitely easier to manipulate as a subproduct of having less liquidity, so it's much easier to move market for large participants to the place they want to move, to their own target, going by their own agenda. Faster moves and changes on the ladder. Well, if you used to see really thick markets like bonds or bunds, where a price tick in between two ticks, going up and down between same prices, for 5 minutes and you can sit in your chair comfortably and read numbers, how a number of orders stacked changes, how much order added, how much order removed, how much traded on bid, on ask. Well, you still see that in a thin market, but it's almost incomprehensible to notice and analyze in time. Uh, on one side, and on a second side, it's very difficult to use this information because since it's so easy to manipulate, it matters very little. So the only thing that matters is a tendency and how it changes. But it's very difficult to notice this kind of change if you try to read exact numbers on a ladder. um, what you should look for some other telltale signs I'm going to reveal just now. Iceberg and divergences. If you used to call tops or bottoms or breakouts by noticing iceberg and divergences, you still can do that in a thin market, but well, for once you have to configure um, your indicators to much larger numbers. Well, much larger, much smaller numbers compared to ES, but the thing is, you either will have too much of them or too little or none of them because they are everywhere. It's small, on a small scale, and it's very hard to use this information, iceberg divergence. So basically my recommendation is configure for gold something like 50 contracts for iceberg and 50 for divergence, and probably the same or a little bit more for crude, um, because you only want to hear them when the really big things appear, but you will see that anyways. Imbalance in actual market orders traded can give you a clue of importance. When you have your NinjaTrader with Jigsaw tools um, started and left run for a while, and you can leave market to its own devices, make swing highs, swing lows, and this information is accumulated on your time and sales. You can actually analyze it, and it can provide you with some clue. Because, for example, if market goes up and then goes down, so you have a high, you have a swing high, and you can look what kind of numbers were traded at this swing high. It's only good if you kind of flash um, data, order count, before it happens, and analyze it after it happens, so you don't have conflicting information from earlier price action in the same region. But basically, if you see market went up to some point, and at this tip of the move you have a large number of market buy orders traded against sell limits, against asks, but still they did not go higher. It gives you a good clue that someone is protecting this high from going higher. So there is probably a stop order there or some kind of interest. So it gives you a clue this price level is important, and we want to trade important prices, but about this a little bit later. Huge imbalances on ladder are telltale signs. Basically, this is one of the two most important indications that I use. When the move starts, you will see huge imbalance. You have to look for total numbers of bids versus total numbers of offers. You can see this on time and sales, on a Jigsaw version of Superdome, and when the big move is cooking and it may not even started to move, and it doesn't mean you have to jump on this still stationary bandwagon. But if you see like something um, on a bid side, 50 contracts total, and on a ask side, on offer side, you see 200. It's 4-to-1 difference. For sure something is going on, and it's most likely that market is preparing to make a move up despite a large number of limit orders above the current market price, because it's always a fight between buyers and sellers, and someone is trying to protect market from going up. On the other side, people who are buying, sometimes it's like a market making activity. They want to get out of the market, and they get out of the market by getting market to hit their sell limit. And when it matters little when we're in the middle of nowhere, like in the middle of the swing. That's why on a previous point I said, you can you should pay attention to the swing highs, swing lows, where you can see these imbalances, different number of market order traded, and when price gets there, pay attention to imbalances on the ladder, because there it matters. There it matters. It matters because as large market participants start moving price at these levels, for example, we have swing high and price approaching it again, making a double top, and we see a big imbalance on the ladder, a lot of sell limit orders, a lot of offers, but still market is moving up. That's important. It's still moving up. It's not stopping. It means there is a huge buying pressure. But as limit orders give you a clue about where the next move will go and how important it is, because if for example, if you have like a forming double top, but you see like almost a balanced ladder, maybe I don't know, 20-50% imbalance, it means there is very little protection or fans going on, and probably this level doesn't really matter, and it make no sense to trade. But a little bit later about it, how we can be traded. So remember, huge imbalances on the ladder are important signs, but only at the right places. It does not matter in the middle of nowhere. And last and but not least, and actually the most important, is reconstructor tape. It's a major indicator, and I love it, and I think Jigsaw Tools provide with a fantastic reconstructor tape that is far more superior than any standard tools. Basically, what do you want to see? If you want to buy, you want to see a lot of buy market orders, large market orders. So I set my reconstructed tape to reconstruct only large orders. For the actual number for those orders depends on the market, market liquidity, market volume being traded this session. But for thinner and less liquid sessions, I would put probably, for gold I would put 10, and for oil I would put probably 30, something like that. And for most liquid, highly traded sessions, I would probably double that. And yeah, basically, if we have price made it, for example, double top, pulled back, but then we start seeing a lot of large buy orders, block orders on a tape, and price start racing up and getting close to this level, potentially making a triple top. That's a big sign of a breakout is going to happen, because you see a large participation. Again, if price is slowly crawling up, and there is a mix of orders and nothing really big, that's a sign of warning. Probably you don't want to trade this market. Did you say chart? Yes, I did say chart, and I do believe while you probably can trade thick traditional markets just from the ladder, because it's slow, and you can only check, you know, the volume profile on the same um, DOM chart, on the same DOM window, and you can actually operate, with volume profile analysis. You can find your VPOC and all this kind of stuff, and you can actually see how it's going because it's relatively slow. I think it matters much less for thin market, fast markets. While I still use volume profile and I find it extremely valuable, it's not enough, and I need to use chart. Price action is a result of order flow, absolutely, and it's a footstep. It's footsteps of order flow. You see where it's been, how it was reacting. So while I'm not a proponent of classical technical trading, of all these EMAs, triangles, hanging mans, candlestick analysis, I don't say it doesn't work or it's uh, not valuable. I don't use it. I know how to use it, but I use it in just an opposite way because I know many people use it and I know where they place their stops and how classical orthodox technical analysis tells them where to place their stops entry, and that gives a good clue where the surge of order flow will come. So basically, you want to see chart, but you want to see just price action. You should be able to see, market sentiment without any indicators, um, and that's what you want to know. Only you want to know market sentiment, and you want to see where price has been and where it was rejected, where it was consolidated. This is what you want to know. Imbalances are easy to spot with price action. Absolutely. If you see, a big run up, huge spike, and price immediately falls down, it was a huge supply area. There is a big imbalance. Market is not in any kind of balance, and price was rejected. But then, if you see trying it again, you have to think there is some force behind it, and you should think what will happen if we go higher. What should happen? Don't trade in the middle, trade where the action is. And that's what I want to tell. Just forget about mid-range. What you should be aware of, and what you should take note is where price was rejected, where consolidations were, and where it could not sustain uh, for a long time, basically. And you should forget about the mid-range. Of course, it's all depend on the time frame you use, but I think since we're day traders, we should consolidate. We should concentrate on session, the current session, like Globex or Pit session we're trading, and if we concentrate on a session, it's so much easier because uh, there is no so much difficulty coming from this fractal concept where you look at the swing, and if you look closer there is a lot of swings inside the swing and blah blah blah. And if you look 1000-year chart, you will see replicating structures and everything like that. But if you just concentrate on a one session, there is no problem like that. Like different trends, you have sentiment, you have swing highs, swing lows, and what you should pay attention is to the swing highs, swing lows, rejections, absorptions within this session, and forget about the rest. Enough with the talks. Show me where the money is. I will. and I will give you some indications how I trade. Doesn't mean you should trade this way, but it's just for educational purpose how you can trade fast thin market with order flow, and most importantly how Jigsaw trading tools can give you an edge, to read the market, because to be successful in trading fast market you need to be really fast and proficient, because things change dramatically within 1 second, and you can't look on many different things, trying to calculate numbers. You need to be able to react really fast, and I think Jigsaw offers a really nice opportunity to get this information fast and a nice way, and especially due to this nice reconstructed tapes and voice warning. So let's continue with some practical examples. So let's have a look at the crude oil example. At this trade, it's already started, but the premise for this trade is a break of a double top. The previous swing high was a significant swing high, and I expected to have some stop orders above. And as you can see, price approached this level with a really nice momentum push. We had really large orders, green orders, buy orders on a reconstructed tape. As you can see, we have some imbalance. It's not so big difference, but it was bigger, and it's still large. It's almost 2 to 1. As you can see, price still moving. As long as imbalance will continue to be positive for our trade, in this case it should be more offers than bids, significantly more offers than bids. We still probably should stay in this trade. As you can see, we have a lot of green block orders, buy orders coming in, and now we have our target field, and it's still moving. You see, it's still moving. So it's a good example of a trade, and it gives you a perspective to see how price action and indication should look like. So you saw a lot of large buy market orders on a tape, on a reconstructed tape, and huge imbalance, and also you saw large energetic pushes on a chart. And here you see it was a significant high before the large leg down in crude. So people who actually got short on the first or second leg down there, um, likely to put their protective stop loss orders above this high right here, yes. And some people who trade reversals, once we reversed off the bottom, some people would place their buy stop orders above. So once price moved fast to our level, usually it's a few ticks above high, a few ticks below low, we should expect a burst of order flow to take us into the trade. And as long as we have those large buy orders keep coming, and ladder to stay out of balance in our direction, in this case more offers than bids, we should be in this trade. This trade offers really nice um, probabilities. Oh, you see, it's still moving. It's such a nice level. It's still moving. Really nice combination of profit versus loss. So the stop on this trade, stop was something like less than 10 ticks, and you can see how far it moved. It moved quite a lot. So it's a nice trade, but let's move on to the next one. Okay, um, here is an attempt to trade uh, order flow on gold with Jigsaw trading tools. I have configured 60-second chart is 1 minute chart basically. It's more for trade management purposes. Idea is to have entry from chart based on a chart zone uh, that is likely to cause order flow because um, when order flow is supporting the trade, it moves so fast on thin market like gold or oil, especially on gold is more thin. And you cannot really read anything on uh, on your DOM. So the only thing that you can actually comprehend is probably the tape. And what I use reconstructed tape. I don't use consolidated tape because again there is no time to read it because there is another one column, another column is great to study in slower markets, absolutely no doubt about, but it's pretty hard. So I found that reconstructed tape that tries to put together individual orders back into original large orders is the best you can watch. So I have set it with a filter of 10 orders and configured to reconstruct only large orders when reconstructed orders is at least of 10, at least 10 contract and alert me on large orders are above 20. So my intention is to take entry with resting order based on the chart pattern and with confirmation from tape. So when I want to sell below the low, for example, I want to price to approach it fast and have a lot of sales, large orders on a tape. Then my intention is to use tape and the DOM to manage the exit because exit is biggest unknown and the hardest to pull, not the entry. Because with this kind of system, you never know where to exit up front. It can run 50 ticks, it can run 5 ticks. So basically, what we want to see a big shift in market sentiment. We want to see a shift on tape. So I want to see some large. If I'm short, I want to see some large buying orders start to come to close it, and I want to see the situation changing in the DOM. I want to see some if I can use some order stacking. Let's put here, here, and here. Okay, and then I have straight bar over here. Hopefully I can see some order stacking and it can help me to find the right place to exit the trade. Again, I have configured to alert me with large bids and offer above 20 contracts. That's quite enough. Now market is thinning, so because it's later in the day, and we had a really big volume today, actually, quite unusual. Um, so now it's dropping. So 20 contracts now is pretty reasonable expectation of a large order. So let's see if we can get some move here. There is a good indication of current bids and offers stacked, so we can see there is 140 contracts of bids and only 50 of offers. Actually, in a very short term, it have to be treated opposite. So if we have a lot of bids, it's likely that market will go down in a very short time frame, because those are the orders people put to get filled on, and they press market down in this situation to get filled on those bids. So it's kind of half market making activity, sometimes stop hunt activity, when they push, for example, they put some limit buys below the low, and they push market with sell orders with intention to get filled on their long position, to get better fill basically without any slippage and without marking price up. Looks like we are moving away for potential entries. There is a good entry here, 350, so it will be 35.2 for me. 35.2. Let's see which one hits first. So let me come back when we get near one of those levels. Okay, now we have order filled, and we see some support. You can see some supporting stuff, protecting our entry, and we can see it's moving pretty nicely, pulling back with one tick from the high. Protecting some profits will be a good idea, or perhaps even go flat. 50. No, now we have a lot of stacking on ask, so there is a high chance to get a fill. So we got filled on a half. Okay, a perfect trade. Here's a third example of order flow trading. This trade happened on 20th of May, was recorded real time, as you can see. Basically what we had a market reversal phase, and we had a down move overnight from the market open on 5 p.m. previous day. We made a sort of double bottom, sitting on one of the important lows from 1 month ago on this huge down move. And during this move we made a higher high. Basically market was very bearish, so bears would have to come in this day during the overnight session, early morning, and would short the market, but they have to place their stop somewhere. And also there are people sitting on their itching hands wanting to go long, as they can see a possible reversal. Since market was moving down for so long time, they are contemplating a possibility of getting a large long trade and stay in it for some time. So basically I can see two possibilities to go long and short. However, short will be tricky because we did not reach this low we didn't match it exactly, so there was some kind of 15 to 20 ticks different. I would prefer to have another low much closer to a older low, but if market is pushing hard, is very down in this case, it would be very hard to get that low. Probably we would cross this previous low level without making a perfect double bottom first. And the problem there is you don't know where to place your order exactly, so you're shooting in the dark. Yes, market is moving down big, but the only possibility to trade this move is to place a large stop orders like 20, 30, 40 ticks, and there is no guarantee of any sort you can win this trade, because it can make another leg up, another pullback before trying it again, make a double bottom. So To trade with this order flow stop hand method, you need to have very precise indication of where your stop zone is. In this case, I find it much more beneficial to trade on the upside because market was moving down the whole night. People went short and short and short. Their stops were above the distinct higher high during this overnight session. So basically, I'm even not trying to get a double top in this situation. I'm fine just to put my entry 2 ticks above um, this previous higher high from earlier to today, this early hours, because again I believe there is a large cluster of stop orders resting there from all those bears, and what is happening now is exactly um, the squeeze, the bear squeeze, short squeeze. So as we get higher, more and more bears get nervous. They try to sell. Some of them, try to average down. They sell more, and this is the reason as we get higher, we see more and more limit orders. People try to protect. They try to get better price. Their reasoning is that as we get closer to my stop order, if I open another short, my risk on this trade will be very small compared to my initial risk. So there is not so much additional risk, but if I improve my entry price, I average my entry price up. So if market will be rejected at this price, it will crash down and I will win big. This is the reason they keep adding shorts, but there is a strong market force, market sentiment driving price up, and this is what we should be looking for on tape. We want to look for large buy orders as we get there and some sell orders, because some people will be selling through the market orders as price gets there. So we want to see a lot of struggle. Before we get there, we want to see a lot of struggle. We don't want to see empty tape. We don't want to see some pathetic price action. We want to see a lot of moves, a lot of buy and sell orders. So it means this level is very important. But then we want to see, as we get closer and closer, we want to see more buy orders, and we want to see more imbalance. We want to see more, in this case, offers than the bids on our ladder, on our time and sales. But let's see how it will develop as we get closer to our level. Okay, we're getting closer and closer to our buy order. So let's see. We have a lot of green block orders on the tape. We have big imbalance on our time and sales and our DOM. So all indication. Oh, it's a big, huge order. But the problem is, you see, we got filled right on top of it, and we're going to get stopped out. And don't be worried, because I use Ninja with configured a local sim 101. It's a local simulation. The move was so fast, so violent. It's a huge move. You can see it. It basically, because it configured with a big delay, like 600 millisecond, it simulated the fill very late and right at the end of the move. When you trade live, your stop orders are stacked on exchange. You just should make sure you trade with right broker who pass through yours to exchange. Almost all brokers do that, at least those who trade with NinjaTrader, and you should be safe. You could get some slippage, but not so much, and you should be winning in trades like that. But if you have a look at the tape, you see how much large, huge block buy orders we've seen there. If you roll recording back, you could see how um, time and sales, how ladder DOM was reacting, and you could see how different order stacking became, how big imbalance was, and how it changed right at the end. So that is it, and I hope you enjoyed my small presentation. Um, if you would like some other questions to be answered, check me out on Big Mike's trading forum. My nick is Zilar. Let me put it for you, and just type in one of my threads, and I will get your questions answered. Bye for now.